Canada's housing market just broke a 4-year record, and yet home sales actually fell last. Yeah, the September 2025 housing report from the Canadian Real Estate Association says that sales were highest for any September since 2021. And they keep going back to this comparison to, highest in the last 4 years, et cetera. But if you go back and actually compare these in a cross section of Septembers year over year for the past 10 or even 20 years, it would be in the lower half or even the lower third of all sales months. So this isn't really a standout performance for a month of September. It's just higher than the last 3 years. It's nowhere near what we saw in 2021. So trying to make it sound like it's even remotely comparable is kind of funny. The big thing from my perspective here is that sales actually dropped month over month from August to September, which is something that almost never happens. So what's really going on? Is this a sign of a slowdown starting again? Are we going to see an absent fall market? Or is this just a pause before things heat back up again? Let's dig into it a little bit. So according to the Canadian Real Estate Association, national home sales fell 1.7% month over month in September, ending the rebound and growth that we saw since the month of April. We were on a pretty good rally in what people felt was a recovery starting in this number of sales. Not when I say recovery, I don't mean price, but the number of sales, the number of transactions was on a pretty good rally. It was not face ripping. It was modest. It was slow. It was sustainable growth. And that finally has come to an end. And it was bound to happen at some point. The trend is still slowly in the real estate transactions, slowly down in prices. Normally this time of year, sales actually rise from August into September. You get the end of what you would call your summer market when not a lot of people are transacting. People are away at their cottages, enjoying the couple of months of nice weather that we have here in Canada. Transacting real estate is usually not high on their priority list. And then you get into September, people are feeling back to school. They are reevaluating the size of their house. They're thinking about plans towards the end of the year and early next year. And you start to see a little bit of a fall market take place. Historically, you will see what we would call the fall market kick in. People list homes, buyers come back after summer vacations, and activity picks up modestly, not like in the spring, but a little bit higher than the summer. But this was not the case this year. This is one of those rare Septembers where sales actually dipped coming out of the summer, led by slower activity in Vancouver, Calgary, Edmonton, Ottawa, Montreal, while Toronto and Winnipeg were actually exceptions that actually saw increases in volume. And even though sales were up 5.2% compared to last year, they're still well below the long-term average, which you can see on this chart here from the Canadian Real Estate Association's website. And for the most part, they are up less than listings are up. And this is really the key from my perspective, one of the only things that matters, which is whether or not supply or demand is growing faster. And as it stands right now, supply is outpacing demand, which means that every month that goes by where you see more supply relative to demand, the market trends more and more in favor of buyers, which means that you'll see downward price discovery. Until this trend reverses, where demand is outpacing supply, and when I say that, what I mean is the number of sales is growing faster than the number of listings. If that happens, then you could start seeing the market flatten out and potentially trend more in favor of sellers, and you would see upward price discovery where buyers have to come up to meet the sellers' list prices. But as it stands right now, there's more sellers than buyers, and therefore sellers have to come down to meet the buyer's bid. And that's how you see downward price discovery take place. And Korea's chair actually admits this, saying that there are more buyers in the market than we've seen in years, but activity is still lagging behind where it should be in a normal cycle. And so the idea of a recovery in Canadian real estate is going to take a lot longer than people hoped or expected over the last couple of years. New listings also dropped about just under 1 percentage point on a month over month basis, which again, usually you would see not a lot of people trying to list their houses in August and more people trying to list their houses in September. People don't want to have their houses for sale in the summer, they're doing other stuff, whatever it is. But we actually saw new listings drop 0.8% or 80 basis points month over month. So demand and supply are both falling, but not evenly. Sales fell faster than new listings, which means that supply is still outpacing demand, even though the market is relatively balanced based on the months of inventory and sales. So the sales to new listings ratio eased to 50.7%, slightly below the long-term average of about 55%. This is still within what you would technically call a balanced real estate market. But this tells us that the market isn't overheating. It's holding steady with a mild tilt towards buyers, and it's trending further in favor of buyers with each passing month, which means that there's no scenario in which prices start to recover until that dynamic flips. And I would argue that, and I've mentioned this a couple of times, that I think that the flow of information and the speed of real estate transactions is so much faster today than it was when we came up with these metrics and these guidances for months of inventory and sales to new listings ratio, that I do feel they're a little bit outdated and probably too lenient in favor of the seller. I would say that we're probably in a buyer's market where we stand right now. If you look at number of days on market for a real estate listing, so how long it takes a house to typically sell, it's been on a long-term gradual downtrend as technology makes it more expedient and quicker to sell a property. And so this would actually skew the metrics, the months of inventory and sales to new listings ratio metrics, in such that they would always read more balanced than they should. I do think that we're in a buyer's market right now. I just don't think that it is defined that way by your traditional metrics of sales to new listings ratio above or below 50% or months of inventory above or below your 6 months. Active listings is another way that we can measure supply. And it's not just your new supply. This is like existing or standing inventory. And active listings were at almost 200,000 properties, 199,772 properties listed for sale, which is up about 7.5% year over year and right around the long-term average for September. So again, you've got sales below the long-term average, listings at the long-term average. I don't think I need to explain to you here how this is not a market that favors sellers. We've now got 4.4 months of inventory nationally, and that's just below the long-term average of 5 months, but it's unchanged since July and August. On the pricing side, nothing dramatic here. And this has sort of been my thesis for a long time. If you've been following me for a long time, if you're one of the people in the comments who constantly tells me that I'm wrong, that prices are going to grind down, not crash, this is what I've been saying would happen. Prices saw the steep drop out of the gate when you saw the rate hiking cycle take place. The market priced in that change in buying power. And then after that, the knock-on effects of the interest rate cycle, your recession, unemployment, especially unemployment, or not even unemployment, the actual employment level, how many people in Canada have jobs, is what drives the later down legs of price in Canada. And now we're getting to that. We're getting to the point where Canadians are losing jobs. We did see a really strong employment print last month, which I was hoping to do a video on, but I just haven't had a chance to get it out. We managed to dodge a recession in the last month, but you're still seeing these quarter to quarter fluctuations where you get a couple of bad data points. We just had Stellantis close in Brampton and move to the US. That's 3,000 jobs gone. A bunch of job losses are happening in the auto and manufacturing sectors. Unemployment's rising across most Canadian cities, except for Alberta, which there seems to be a little bit of exceptionalism. But the MLS home price index was basically flat at 10 basis points down on a month over month basis, but that's down 3.5% year over year. The good news, the annual decline should start to shrink in Q4 since the market correction last fall is falling out of the year over year comparison. And so a lot of this is just base effect, right? So you'll start to see year over year prices will actually look flatter, and provided that we don't start another down leg in price, which I do think is possible. I don't know if it's as possible at a national level where you've got a lot of those more affordable markets that are still growing, but in your Torontos and Vancouvers, especially Toronto and most Ontario markets, another down leg seems like a really likely outcome right now, given what's happening in the employment market. So prices have assumed this kind of stable downtrend. We're not in free fall anymore. That volatility is behind us, but we're certainly not booming or recovering either. So how do we read all of it? The September report paints a very mixed picture. Sales dipped unexpectedly on a month over month basis. They kind of broke their typical seasonal trend of a fall market. Supply also fell, but it fell less than demand. And so supply continues to outpace demand on the growth side, meaning the market trends more in favor of buyers, more in favor of downward price discovery or prices falling heading into the fall market. Despite that, prices stayed pretty flat on a month-over-month basis and are now down about 3.5% year over year. In short, the momentum that we had for much of this year, where you're starting to see a gradual return, definitely cooled off. And a lot of this is probably because we're finally getting to the breaking point of Canada's economy, where you are starting to see layoffs, bad economic data, insolvencies rising, delinquencies rising. I mean, there's no real good data point coming out of Canada's economy right now, except maybe GDP, which can be kind of propped up by a number of different things. Even the job number. I mean, a lot of the job growth was, I think 30,000 was public sector hiring. A lot of the GDP growth is coming from government spending. CREA's senior economist, Sean Cathcart, still seems to think that there's 3 years of pent-up demand waiting to re-enter the market, especially now that interest rates are closer to normal again. I'm not sure I necessarily believe that because, I mean, maybe there is pent-up demand, but people can't afford to buy houses at these levels. And so it's not necessarily real demand. It's only real demand if people are willing to buy at or able to buy at prices. And the only way that that can happen is that price level becomes more in line with income, which means we either need wage growth, interest rates to come down further, or prices to come down further. Interest rates have done a lot of their job right now. And again, we probably have another 75 basis points max. 50 basis points would be my guess. And then towards the end of next year, I think the bond market is pricing in rates actually moving up towards the end of next year on the fixed side. The Bank of Canada likely won't follow, since they will need to stimulate the economy with their rate. And so let's be real on this thesis from the Canadian Real Estate Association, which, I think a lot of the economists who are that belong to the association or business that they represent, they have to talk their book. And so that's sort of what's happening here. But for that to happen, from my perspective, confidence needs to come back into the market. Buyers need to believe that this stability is real. And it's not just housing market stability. It's not just price growth stability. It's also, am I going to have a job in a year? Is the economy going to be okay in a year? Am I going to be able to afford groceries in a year? And so if we don't have stability in a lot of those factors, where you're seeing risk of inflation, risk of job losses, people aren't super eager to go and make massive investments. So even with this best since September 2021 headline, total sales are still well below long-term trends. The market has obviously improved from its 2023 lows, but I think we're really in a holding pattern. We're not even really in recovering mode. And a lot of the fundamentals are broken. Population growth is obviously slowed, and there's no real political support for people for that to ramp back up. And so I don't know if that's coming anytime soon, which was a big bull case for a lot of people in the real estate profession. We'll obviously continue to see improved affordability from rate cuts and prices. So no, much like basically every monthly report that comes out of the Canadian Real Estate Association, this isn't the turning point. It's kind of a cry wolf scenario with a lot of this stuff now, where it's like, surely this is the month where things will turn around. Well, no, the market can. It's not binary, right? It doesn't have to be going down or up. It can do nothing for a very long period of time as buyers try and figure out what's going on before it starts to recover. And we're in that awkward middle ground. It's just a lot longer of a middle ground than most people want it to be. There's no bust, no boom, as I mentioned in a recent video that I put out from Oxford Economics. And if you want to track that transition, follow the market, and understand what all of this data means, hit the subscribe button, subscribe to my channel. I cover this stuff several times a week. And if you prefer to read this rather than watch a video, you can subscribe to my Substack, and I publish all of the research that I do on my YouTube in video format. I also publish it in text, and it'll get sent right to your email. Thanks again for watching. It really means a lot to me that you take the time of your day to listen to what I have to say about the real estate market. I'll see you again as soon as I can.